Good afternoon. Welcome to the Octopus Money Coach webinar on conquering the cost of living hikes. My name is Ed Fraser and I'm an accredited financial coach with Octopus Money Coach. My aim when I'm working with people is to give them the time and the space to gain clarity on their goals and finances, but also to feel much more confident in what they are doing with their money. Ali?
Hi everyone, I'm Ali Poulton, also an accredited financial coach. My goal with my clients is to help find the right financial balance based on having enough to spend now on the things that they love, but also thinking about those future goals all the way up to retirement, working on getting that balance right. In this session, we want to give you the key facts so that you can see what's causing the rise in the cost of living and some key things you can do, the key things that you can think about when it comes to your money. We're not working with you one-to-one in this session, so we'll only be able to provide you with some general guidance and not specific financial advice. We want to keep this session short and sweet and share as many tips and steps to take as we can. If you have any questions, please pop them in the chat and we'll follow up with the answers in an email after the session.
So let's get started. One of the most important things to think about in order to understand why the cost of living is rising is inflation. Now, you've probably heard of inflation, but to put it kind of simply, just so we're all clear, inflation is the increase in the prices of goods and services over time. So think of it as kind of when a tire or a balloon is inflated, think of it as it's getting bigger, but when prices are inflated, they also are getting bigger. And unfortunately, that means more expensive for all of us. Inflation, the way it's measured is via kind of percentage increases over a year. So for example, we could look at a camera. So if a camera costs £100 in April this year, and that price rises to £110 in a year's time, you could say that that inflation was at 10%. Now, it's also important to acknowledge that some price inflation over time is normal, but in moderation, inflation can actually be a good thing. But right now, we're seeing prices rise pretty rapidly. It's very steep at the moment in lots of areas of our lives. And the latest kind of April numbers from the ONS are that prices on average, latest reported ones, that we're at 6.2% inflation figures from last year. Now that is suggested to be hitting about 7% when the next figures come out. I think it's in the next few weeks, and potentially up to kind of just over 8% later this year. Now, over the last couple of months, we've seen, right, I mentioned that price rises in so many different areas that you will be aware of, and some of them you might not be aware of. So there's the energy cap, which is the big one. National insurance contributions have increased. There's been council tax rises, water bill rises, car tax, rail fares. They all went up recently, but also kind of fuel costs. Filling up your car has been just ongoing, certainly over the last year, and your food bills as well. So
basically everything.
Unfortunately, yeah. So what we need to think about is, well, what's causing this? So we can kind of go over some of the major factors that are contributing to this. As you can imagine, there are lots of different factors that do contribute to inflation, such as the cost of making things has gone up. The cost of getting kind of raw materials kind of out of the ground, or even kind of just finding them, is also on the rise. So when you think about what's going on a global scale, there are lots of interconnected issues. Now, COVID is one of the big ones. So during the last 2 years, there's been big delays and blockages in the global supply chain. There wasn't enough people working because we were in lockdown. And many of those factories in the industrializing parts of the world were simply not producing these items that the world needs, and a lot of the demand has risen, especially since lockdown has kind of eased in the last kind of few months. And so that's contributed to the rise in the price of many, many different items. Now, one of the major factors that is kind of adding to the rising cost of everything is actually energy. So Household bills are feeling the kind of the pinch at the moment with the energy cap, but also every single business. And as I mentioned there about kind of fuel is a big one too. Another area is kind of changes is in any kind of trade around kind of post-Brexit now has resulted in rising prices for some products. And the one thing that's been in the news, which we can't escape from kind of what's happening over in Ukraine, is the war there. And what that is now doing is also impacting the flow of materials such as kind of energy coming from kind of that region, or agricultural products, metals. It's all adding together to kind of, as you can see there, many different factors. But one of the main points that Ali and I wanted to basically get across to you today is that you don't need to panic.
Don't panic.
The newspapers, social media, there will be continue to write these kind of scary kind of headlines because people will still keep clicking on them. People will need to kind of, they want people to read them. But for many of our clients, when we've been speaking to them, is the fear is about the unknown.
Absolutely.
It's scary not knowing what is happening and how it's going to impact you kind of later this year. What's going to be life is going to be like in 3 months, 6 months, in a year's time. That's why we want you to leave today with more information about what is in your control and what you can do, but also just to be able to understand what's not in your control and to accept that you can't change some things. So for the next few minutes, what we're going to do is we're going to talk through a few practical ways that this might be impacting you, but also to share some tips to help handle these and some steps to make sure you're kind of managing the cost of the rising cost of living. So there are 4 things you should have in mind. Okay, and so hopefully some of you will be aware of these, but I'll just go through them one by one. Number 1 is energy costs are going up, and we'll talk through that. Number 2, national insurance tax is changing as of this month, so your salary is going to change. Number 3, the cost of everyday items is rising, and it's also especially important where that has risen vastly with some of the big ticket items. And the last point, number 4, is that the money you've been saving might actually be worth less than it was before.
So let's start with the energy costs, because I know that they're on everyone's mind. Energy costs are going up for everyone, and Ed just explained some of the reasons for that. So what can you do? First of all, 20 million households in England in council tax bands A to D will get a £150 rebate on their council tax from this month. This is part of government measures to support people through the crisis. So if you pay your council tax by direct debit, the £150 should actually be paid straight into your bank account. If not, you'll be notified about how to claim it. And if you don't do that, it'll be a rebate on your bill. There are also small things that we can do to use less energy and knock a few quid off our bills. So things like turn off your appliances at the plug. Octopus Energy suggests that this can save us between £40 and £80 a year, especially older appliances like big plasma TVs. Also think about turning off as many items that you generally just leave in standby. So games consoles, laptops, they both use quite a bit of electricity when they're just left. Phone chargers that aren't charging a phone, but they're left plugged in, can add up to £6 onto your annual bill when they're not in use. Printers left on are a big culprit too. Things like energy efficient light bulbs, they can use up to 80% less energy than regular light bulbs. Washing at 30 degrees can save yourself a third on the cost for every wash. And unless you're popping in muddy sports gear, 30 degrees does a really good job. On sunny days, hang that washing out on the line. Tumble dryers are a huge energy user. A few others, so only boiling the amount of water that you need for your cup of tea or coffee in the morning, not filling the kettle. Setting your fridge and freezer to 1 degree warmer if they're set really low. All these small things add up. We're not going to tell you that switching to energy efficient light bulbs is going to cut your bill in half, or switching every appliance off is going to see a significant drop in your monthly bills. But over the year, these things really do add up. And the fact is, any extra pounds that you can save yourself right now are going to help.
Yeah, I think I was just going to add in there that there is there's no golden bullet. There is no magic wand, unfortunately, that is going to just fix things. As Ali said there, it is these small things. You're going to have to look at lots of different areas, and they will add up to make some difference, but there isn't, as I think you read in kind of papers and you hear a lot of people talking about, there's no magic wand, unfortunately.
As difficult as it may feel, I'm also telling my clients to look forward and to start to prepare for additional price rises later this year. In October, the energy price cap is set to increase again, potentially another 30%. And this is at the same time that we start turning our heating back on for the autumn and the winter. So throughout these summer months when costs are lower, think about whether you can set aside a percentage of your bill to help feel prepared if prices do go up. If you're paying by direct debit, your energy provider should do this for you to some extent to balance out the cost of your bills over a 12-month period, but you will still see an increase in unit prices in October, so it's worth thinking about. If you're not on direct debit or you're not sure, make sure that you know when to expect your bills and how much they'll be. Contact your supplier and they'll be able to tell you. One question that I'm asked a lot, I don't know whether you are as well, but is whether now is a good time to switch to a fixed contract. So my answer is that in most cases, it's still best to stay on the variable rate because there's just no good fixed rate deals available at the moment.
Okay, so the second big impact you'll feel is in national insurance. There are changes to the amount of national insurance contributions deducted from your pay that you need to be aware of, and they are starting this month. Okay, so it's important to think about what those impacts will be, because when you open up your pay slip, it could be today, it could be over the next few days for this month, there is going to be a change. So the first thing is just to be super clear on, so we're all aware of what it is. National insurance is a tax paid by the employees on earnings. So it already comes out of your salary each month. And the things it pays for are things like the state pension, statutory sick pay, maternity leave, amongst other things. Now, there are two changes that are happening. Now, the first one is happening basically now, it's this month. Now, the tax is increasing. So it's increased 1.25 percentage points to pay for health and social care. So what that means is that the rate is rising from 12% to 13.25%. And then on a salary over £50,270, it's going from 2% to 3.25%. The second change you need to be aware of is in July, so not that far away. And so it is around the point at which you start to pay national insurance. So what kind of level of earnings you have. So it's called the salary threshold. That's rising from the current rate of £9,568 to £12,570. So that means that your salary below that £12,570 won't be taxed with that national insurance tax there. The good news about that is that this change actually does mean a lot of people will actually be paying less national insurance in July than they are today. So actually your pay as of July will slightly increase. But what does that actually mean for you? Well, your take-home pay will look a little different from last month's. There are a number of different calculators that you can kind of use, but what we'll do is make life a lot easier for you. We'll send you a calculator link after this webinar on an email, so you can just kind of go onto it straight away and see what the differences are going to be for you. But what we've done on this slide, we've got a few examples, so you can see on salaries of 20, 30, 50,000, 70,000 pounds. So you can see the differences as you kind of rise up through a salary there. The next thing to think about is when you figure out what the change is for you, is to try and translate that into something that is more meaningful to your day-to-day spending. So I do this with my clients, I don't know if you do it with your clients, is to help them to understand really what does that actually mean for them. So it might be somebody who loves their coffee, might be having one coffee a week less. over the course of the whole month, or it's the kind of the Spotify subscription, or whatever it might be, one Amazon order a month, that is the difference that you're going to can feel.
We've already started talking about the third impact you're probably feeling, the rising cost of everyday products. Everyone will notice this differently. So from your weekly food shop and the cost of filling up your car to the rising costs of items for bigger projects that you're working on. But generally, my guidance is to look for ways to spend smarter, find areas to cut back that are right for you, possibly reconsider some big ticket purchases where costs have ballooned. So let's look at each of those individually. Some of you listening might find that because your take-home pay is changing and cost of things is going up, you want to find ways to spend less money. So first work out where you can cut back. Here's a simple task that I do with all of my clients. Create a simple spreadsheet with everything that you spend money on an average month. Make sure that you go back, look at the last few months to ensure that it's accurate. Prioritize your spending. Highlight the things that you either have to pay, like rent, mortgage, bills, and the things that are most important to you. You will want to keep those. Then look at what's left. You might actually see a few things that you can live without. You may even see some things that you forgot you were spending money on. Literally, you were just mentioning that you had a friend who was double paying for his gym membership.
Yep.
So have a look. Are there things in there that you don't know, that you didn't realize that were just going out on a monthly basis? It all adds up throughout the year. Throughout lockdown, a lot of us signed up to TV subscriptions. Now that the world has opened back up again, they aren't being used as much. Do you still need them?
I love that I can do without Netflix for the time being, but I've got young kids, so the Disney subscription has to stay for the time being.
That's it. So when it comes to impulse buying, I know you're bad at that too. So sometimes I like to ask my clients to go through their bank statement for the last 3 months and find 5 things that they've bought that they either have some regrets about or didn't make them happy as they thought they would. So these are the easiest things to cut back on because they don't feel like a sacrifice. If you're the kind of person like Ed who likes to shop online and very easy to hit that buy now button, the money's been spent. If you would like to do this less, you could add some friction to the buying process. Switch off that one tap button, buy button. Remove your credit card details so that you either have to enter it manually every time. Just that action of having to go to your wallet, get your card out, pop in the numbers. It gives you that more time to think about those items. For bigger ticket items, make yourself wait 24 hours before hitting that buy button. Does it really matter? Anything that makes you think about whether you actually need the product a bit more is a good thing to do in these times. There are some inflated prices that you may not even notice, but there are some bigger ticket items that you will definitely notice. So for example, the price of a used car has already increased 30% in the last 12 months. And in some cases, like the Ford Focus, nearly 50%. This increase is clearly even higher than the rate of inflation. It's due to the fact that there have been delays and shortages. We've talked about that for the new cars, which in turn drives up the price of used cars. Great if you're selling one, not so great if you need to buy one. So if you can avoid buying a used car at the moment, you probably should.
Now, the final impact to talk about is the impact of inflation on your savings. So one of the toughest parts to swallow about inflation is that your hard-earned money that is sitting in a current account or even a savings account is losing its value and is worth less than when you earned it. So why is that? So think of this. Imagine that you've got £1,000 in a really good savings account that's paying you 2% interest a year. In a year's time, that will grow to £1,020. But if inflation is growing at 6%, you'd actually need £1,060 in a year's time to afford what £1,000 could have bought you in this year. Now, the good news is that it is possible to get better returns on your savings than 2%, and that's through long-term savings options. But because investments go up and they go down, this involves taking on more risk than a cash savings account. So it's important to only invest money that's not needed in the next 3 to 5 years. So you're really looking at a beyond 5 years kind of timescale there. Increasing your pension contributions is another option, and they are ultimately kind of put into long-term savings. And that's another way to make your money work harder for you in your future. But please be aware that your pension is locked away until you're 55, at least 55 years old as it stands right now. But before you take any of those steps, it is important to think things through about what your medium-term goals are, what the long-term goals are, so you know you are able to achieve those. If you're saving for something in the short term, maybe the next 2 to 3 years, you might want to consider a notice savings account or a fixed rate savings accounts, where you should be able to get better interest rates than the standard easy access savings accounts available to you at the moment.
So now we've talked about a few specific ways you might be impacted by the cost of living hikes. So energy costs going up, national insurance changes, prices going up, and changes to the value of your savings. Let's take a step back. We want to share 4 bigger ideas you can take to feel more peace of mind and more in control of your finances in moments like these. Step 1, get clued up on your individual situation so you can start making the small changes that are necessary. Check your numbers first. What is your exact income now? What is it going to be? You can use the National Insurance Calculator we'll be sharing in an email. Where is your money going each month? What costs are fixed, like rent and bills, and what costs vary month to month and are more in your control? It makes such a big difference to feel clear on this. Decide what needs to change. Do you want to cut back spending somewhere? Do you want to save £20 more each month? Whatever changes you want to do, make sure they're realistic given what you earn and spend, and then decide on the actions that you're going to take. Discuss them with your partner or your friend or your coach. We are very good at helping you get committed to making those changes happen. Then at the end of each month, reflect on the changes you've made. What's gone well? How has it gone well? What are you struggling with? Why? What else needs to change?
Step 2, get prepared for the unexpected. So none of us can know what the future is going to bring, as we've seen really over the last couple of years. And it does lead to stress, ultimately. But there are steps that we can all take to feel more prepared for whatever comes our way. So you could make a monthly habit of adding money to your savings, which is a really good first step. It could be setting aside £10, £20, £50 a month. Everyone's got to start from somewhere, even if that's £1 for you. It's all worth doing to get going on that. Now, it can take time to build, but one of the most important or most powerful things you can do to feel in control with your money is to have an emergency fund, or what we sometimes call a rainy day fund. Now, this is a pot of money that's set aside in case the worst was to happen, unexpected happenings, an emergency of some sort, something breaks, you have to kind of fork out. We typically recommend having set aside about 3 months worth of spending. Now, you could look at it, some people would like to say, well, I'd like to have 3 months net salary, and to have an easy access account that you can call upon when needed, if needed. Now, it will take time to build up. It's not going to be an overnight kind of easy fix, but I promise you it will make you feel much more confident in moments like this one. So the next time there is a huge energy rise that's maybe unexpected, or a bill comes through or lands on your doorstep you weren't, or email account, I suppose these days, that is you weren't quite expecting, you can sit there, rest easy, that you know you've got that cushion in place.
Your boiler breaks down.
Indeed.
So step 3, think long term today. One of the secrets to feeling in control of your money is to plan ahead and not live month to month. As human beings, we're wired to focus on the present moment and what's right in front of us. But to have enough money for our big life goals, we need to think more about the future. This is what I talk about when I mentioned balance earlier. So first of all, what are your goals? Sit down with a partner or a friend and figure out the goals that are important to you. It could be plans for a wedding, buying a property, a travel fund, or getting yourself to that £30,000 income at retirement. At times like this, it's also important to figure out if the cost of some of your medium and long-term goals are now higher than you originally planned for. Some of you may have already created a financial plan. Now is the time to revisit it and make sure that the numbers that you're saving for are still accurate. For example, I have a client who is saving to buy a car. We updated her plan because she'll need slightly more than we thought when we created the plan last year. Then, as we said earlier, for goals more than 5 years away, consider whether investing some of your money could be a good option for you. Because retirement is a long-term goal for many of us, investing in your pension can be a great option for some of us. It's also one of the best ways to try and retain the value of your money during inflation. For some people, even increasing your pension contributions by just 1% can make a significant difference to your finances in the future.
Step 4, start a conversation. So there's still so much taboo and stigma around money. 8 in 10 of us do not find it easy to talk about money. And I'm definitely one of those people. So I used to know that feeling when I really well, because I grew up in a household that didn't talk about money. It was considered to be rude to talk about it. So it's taken me time to feel comfortable talking about it, but definitely talking about it's definitely helped me. So it is a proven thing that talking to somebody about money, whether that's your partner, a friend, or your financial coach, actually will help us manage our money better. It makes us think about our money in a different way. And it means we don't just ignore it and we stick our head in the sand. Because we all have a relationship with money that goes way back, and talking to others can help us learn more about what that relationship is like. So the more you know about your relationship with money, the easier it will be to make those changes you want to do today.
I've often found that when people come to the sessions, they find that it's a great way to talk to somebody who's impartial as well. So you haven't got that emotion of family members or friends. When you talk to a coach, it's completely impartial. And
having that time and space that most people don't sit there and go, I'm going to carve out an hour to talk to somebody about finances. It's just other thing. Life gets in the way, isn't it?
So we've come to the end of our session today. So thank you so much for taking time out of your day to listen to us. Ed and I really hope that you found it valuable. Octopus Money Coach will be running more group coaching sessions like this every month. So we hope to see you again soon. Finally, please check your inbox later today. We can see that you've been asking some questions, which is great. We'll have a look through those now, and we'll share these slides and the answers to those questions via email. We hope that you have a great rest of the day, and thanks very much. Bye for now.
Thank you. Bye.